Due to the graphic nature of this program, viewer discretion is advised.
Hello, everyone. It is the Friday, May 8th, 2026 episode of the Marco Dure Show. Thank you for tuning in here. Today's groundbreaking news right here in America and across the board, where the facts are facts and hard truths thrive. Let's begin the best hour of radio, informative, uncensored, unapologetic, and ready to go. As our week comes to an end, ladies and gentlemen, unfortunately, we still have no shortage, though, of very important articles and topics we'll delve into today. We'll talk about what's going on with the war in Iran, how that's kicking up right now. We'll talk about the hantavirus. I think that's going to be something interesting we have to delve into because a lot of people are starting to freak out about this for some reason. And we'll look into Howard Lutnick, a little bit what's going on with his testimony with Congress. And we'll look at Virginia's redistricting campaign that took place and what's going on with the legality of that. I don't want to waste any more time, though. Let's jump right out of the gate with my first article out of CNBC. Our jobs report numbers for the month of April was better than expected, which I'm glad to see. Though I'll explain to you why that maybe isn't something we should always just be getting our hopes up to. So, let's jump right into it. Non-farm payrolls rose by a seasonally adjusted 115,000 for the month, down from the 185,000 created in an unusually strong March. But the unemployment rate held at 4.3%. Further proof that the labor market has reached a point where only modest job growth is needed to keep the jobless levels steady. Now, where did this job growth come from, though? Where are these jobs being created? From the report, it's showing us that healthcare was leading the way with 37,000 new positions, though multiple other sectors also saw some very significant growth as well. We're looking at things like transportation and warehousing, adding roughly 30,000 jobs. Retail rose by 22,000 jobs. Social assistance saw a gain of about 17,000 jobs. Here's where the downfall comes in. The information sector has lost 13,000 jobs, a part of a continuing trend that we've seen categorically down 342,000 jobs since November of 2022. Again, we're looking at things like AI, taking a lot of these good-paying jobs away, and that has equated to a loss of 11% of jobs in that sector during that amount of time. We need to see things like manufacturing up, and unfortunately, from an article I looked at earlier, showed that we lost 2,000 jobs in the month of April, not in the direction we want to be going. We want the manufacturing jobs to be gaining. That's where a lot of the middle class is built, folks. And that's what I want to see, and we're not seeing those particular gains. Now, some of you will say, well, Jerace, look at healthcare is a good field. There's many good-paying jobs, and I don't disagree with that. However, when we talk about the bulk of the jobs that are being created in healthcare, not all of them are good-paying jobs, unfortunately. So we've got to take that into consideration as well. When we look at the unemployment rate, and I always tell you the unemployment rate is sometimes indicative of strength and sometimes it's not. When we look at the so-called real unemployment rate, it jumped in a large part to a surge in those employed part-time for economic reasons, often referred to as unemployed. That level rose by 445,000 to 4.9 million Americans. So when we think about job growth and consider the unemployment rates, we have to see where the labor force participation rate is, and that's still in the low 60s today. We want that number to rise a little bit more. So I want to be very clear about what's going on. We have some revisions from prior reports being mixed. The March count rose by 7,000, while the February number moved even lower, down by 23,000 to a loss of 156,000. So let's all be very clear about what's going on here. So the initial report put the February job loss at 92,000. So we've got to start making gains, folks. This is what I'm trying to make very clear to you. We need to start making gains, and President Trump has put in the tariffs in the hopes that jobs will continue to come back, that the manufacturing will continue to come back to America. But we're not seeing that just yet. And I'm very fearful, especially the way this war is going, with the way the oil markets are going, and especially in that sector, we're not seeing these good-paying jobs coming back to America. We need that. We need that to grow this country, and we are in desperate need of that right now. Now, while layoffs have held their lowest levels in decades, economists have now increasingly have pointed to a slower hiring. So it's slow to hire, slow to fire kind of market that we're in right now. It's a volatile market. We're seeing a lot of labor cooling right now, but the hard data has been strong. The sentiment indicators show that the tepid hiring plans in both manufacturing and the service sectors are low. We need to get these up. This is what needs to take place. Now, one other thing I want to share with you, too, that's very, very crucial that we need to talk about is the job wage growth in America. Look at this. It says average hourly earnings, another closely watched metric of the labor market health, came in lower than expected. An increase of only 0.2% for the month and only 3.6% on an annual basis. So this time last year, we're only up 3.6%. Now, that has nothing to do with the inflationary numbers. Keep that in mind. When we look at inflation where we were a year ago, it's 3.5%. So we only have a job wage growth of only about 0.1%, folks. That's not keeping up with inflation. So when we think about where we were a year ago, the numbers are obviously not where they need to be. We need to get the job growth numbers up. And again, they've been very stagnant for the past couple of decades as far as overall growth in America. So, where does this leave us now? Where do we go from here? Is the economy where it needs to be? Well, as I told you on Wednesday, we looked at the stock market showing some positivity. We'll get into the numbers in a little bit. But we're looking at the treasury yields were a little bit lower. We're also looking at the percentage of which they're trading at getting a little bit higher than they ought be. And by the way, we're trading, I believe that's what I saw earlier on a CNBC too. The 10-year yields were at about 4.3% earlier today. It could be up, it could be down, I'm not sure yet. But the problem is once that gets to 5%, once that gets up in that level, we're in lots of trouble. And right now, China, Japan, among other countries, they're not buying our debts right now. In fact, they're selling it awfully quickly. And if we don't have anybody buying up our debt, folks, that means our way of life, our quality of life here in America is going to change dramatically. Especially once the petrodollar is not going to be the world reserve currency, things are going to change dramatically in this country. I don't think it'll be anything like any of us have ever seen before. Now, that's what I've, again, been researching. That's what I've been looking up. I pray that doesn't happen. I hope the economy revives itself. But based on what I'm seeing in the markets, a lot of it's being propped up right now. Now, what do we move on to next? Let's switch over to the trade court's ruling that Trump's replacement tariffs are illegal. I think this is actually a good thing because, again, I want Congress to set tariffs. I don't want President Trump to wake up one day and decide, hey, we're going to have a 10% tariff on everything coming out of the EU, and only the EU. I don't want things to work like that. It makes for an unsteady market. The economy doesn't know how to react to these things. Are the tariffs going to go up? Are they going to go down? Should we plan to invest or not invest? What's happening with the interest rates? All these things are very, very important. But a federal court on Thursday ruled that President Donald Trump's unlawfully use of Section 122 of the Trade Act of 1974 to impose a 10% global tariff, the backup plan for when he was shot down by SCOTUS earlier, using the IEPA format, was determined to be unconstitutional. Again, I've told you this before, folks. Congress has got to be the one that sets the laws. They handle all the tariffs, the duties, the excise taxes, all of that. Taxation lies with Congress. We have a majority in both the House and the Senate. Why are we not letting Congress handle this? Because then it would be lawful. So if President Trump would like a 10% global tariff, well, he can have one. But this plan of just waking up and deciding one day we'll do 10%, then we'll do 5%, we'll throw a 156% tariff on all Chinese imports, which would be devastating to the economy. All these things should not be happening this way. We've got to have some cooling in the economy in terms of what we do with these tariffs. Because companies cannot plan ahead and decide, well, I'd like to invest, but if all these goods coming in are going to cost me 10, 15% more, 25% more, 35% more, we don't know what's going to happen. I don't know if people are going to buy from me, if they're not going to buy from me. Do I hire more workers? Do I let workers go? What do I do? And this has been the sentiment in a lot of the job force that we're seeing. So I'm glad that this is being shut down. I would like to see if President Trump has a reasonable position to collect tariffs, to raise money in the U.S., which has been done in the past, that Congress acts on this and in a reasonable manner, and that we actually get the discourse from the American people involved in this. Do we want the tariffs? How high do we want the tariffs to be? And this is why we have a representative government, ladies and gentlemen. But the divided three-judge panel on the U.S. Court of International Trade concluded that the president's Plan B was similarly unlawful, and it was, and two judges in the majority barred the administration from collecting the duties from Washington states and two companies that sued over the policy. So, again, where does this leave us? It leaves better consumer sentiment now that we're not having all of our imports slapped with a 10% tax, because that's what it comes down to, folks. It's a tax on you, the consumer. If you get something imported, let's say from the EU, and that's something you like and you buy it all the time and it's always at the grocery store, it's something that you like, you're getting a 10% tax put on that. But as I just showed you, what are your wages worth? Nothing. The average American got a 3.6% raise. Unfortunately, though, when you look at inflation, you only got about a 0.1% raise. You're not keeping up with the price demand that's going on. So when we see tariffs to the degree which we saw, people were paying much, much more. We saw the CPI numbers going up. And nobody was saying anything about it. I was on my show. But nobody's talking about this. They're saying, look at all the money we brought in. We brought in $166 billion. And that's good, but the problem is it's translating over to you, the consumer. And most people can't figure that out. They don't understand why they're paying higher prices. That was the reason why. And again, we didn't get the jobs coming back to the United States either. If we did, we would see the manufacturing numbers beginning to rise, which we did not, and we are not. We're actually seeing a reduction in that, the wrong direction for what would be a much healthier economy, folks. Let's make sure we understand all this. So I'm glad to see that this was shot down. I'm not shocked about this. I told you before, we have to follow the law. And again, the IEPA laws were certainly not in conjunction with how the law itself was written. And again, these global tariffs he just installed right afterwards. I'm sure he'll go to something else too, by the way. He'll find something else that was written, God knows when, and he'll try to use that to slap on more tariffs. I don't know why he just doesn't go and use Congress. I think there could be something to gain from using minor tariffs to collect money, should we need to. I don't know what we're going to do with that money, but we can do these in certain formulaic ways that are conducive to a stronger economy and actually make an incentive to bring these jobs back. But we've got to do a lot on our end, too. The corporate tax rate in America is very, very high. It's obviously not something that's going to be done overnight, but it's something we can look at for the future. And by the way, this ruling is going to be a major victory for a lot of small businesses. I do believe that, which they need right now more than anything. And we've got to understand this is an important win for American companies that rely on global manufacturing as well, because there are a lot of things that we don't make in this country. So when we look at something like Section 122, allowing the president to impose a temporary import surcharge up to 15% for no more than 150 days when the U.S. faces the fundamental international payment problems, including large and serious U.S. balance of payment deficits. Now, are we in that situation? We've had trade deficits in this country since 1934, folks. This is not something that's just done overnight. We've got to see where we were in the country when, in 1974, we had outrageous inflation that was going on. We're not there yet, thank God. But we haven't seen anything like this before. We really haven't seen anything like this. So Trump has got to follow the law. That's what I'm trying to say. We've got to act with Congress. That's the only thing I really want to say about this. I'm not surprised it was shot down. And I think as we move forth, he's got to get Congress to begin to act on this. And then we can actually implement some stability in using these tariffs and collecting these fees for the government as time goes on. All right, let's move on. I want to go on to an article because I think it's an offshoot about where we are, especially in our economy. And that has to do with AI, folks. And a lot of what we see in our market report today is going to be very reflective on where we are with AI. So let's jump into it. It's out of Quartz. And it says here that in the last month, President Trump, his chief economist, was talking about the AI intelligence that we're using and the boom that it's creating, and it's going to be unleashing an explosion in productivity that enables one of their goals at the Federal Reserve, of course, to lower interest rates. We've got to bring inflation down. That's his number one thing, except what we're doing right now is causing the opposite effect. It's actually going to be rising inflation, which means we're going to have to stave off the lowering interest rates for quite some time, I'd have to say, if we're following the rules, which is why Jerome Powell was so hesitant to do so. And he was right to do so. We didn't reach our benchmark of 2% last year. Right now, we're headed to, I think about, the latest estimate I saw was about 4.2 to 4.5% inflation year over year in 2026. So we're not anywhere near where we can be to lower interest rates like Trump did in his first term. Now, why does he want to bring the interest rates down? Because he wants to make it cheaper for people to borrow money. We have more money being borrowed. People are investing more. People are spending more. And that caused the economy to grow, which is what he wants to see. We're not there, though. That's the problem. Now, in this account, they outlined a scenario in which the massive spending on AI and the data centers eventually boost worker productivity for workers to become more productive, in turn boosting the U.S. economy growth without igniting inflation. Unfortunately, folks, as I said before, we're not there, though. They think this is going to take the pressure off the Fed so they can be able to lower the rates. It's not going to happen, though. We are headed, ladies and gentlemen, for an AI bust. Let me just point that out to you. Lots of investments happening, but a lot less productivity is taking place. That's the problem with all this. So you can invest a hell of a lot in AI. But if those data centers don't get built, if that infrastructure for the energy, the nuclear power that President Trump's putting a lot of money towards and investment-wise, if that money does not equate to anything, your investment means nothing. And there's no profit to be had. And then people stop investing in you. And then what do you have? You have nothing. So let's understand that if we don't start building soon, if we don't really get this moving, if we don't get the collection and the extraction of the rare earth minerals that we desperately need to start producing here in the United States and refining them here in the United States and not relying on China that wants to crush us economically, we're in lots of trouble. And let me just point this out to you as well. We need a lot of these rare earths for things like our cell phones, a lot of our technology, the semiconductors that we want to build. They go into our EVs. They go into so many different things. They go into our missile capability. Do we really want to have our military relying on China? I don't think so, folks. I really don't believe that at all. So we're at a point, we're at a crossroads. Think of it like a watershed moment. We have to decide, are we going to let China lead the AI market, which a lot of economists are saying right now they are looking to be the leader, and whoever leads in AI, whoever leads in the rare earth minerals, which is China right now, they refine well over 90% of the market. Everything goes to China for refining. And they're investing heavily in that too, by the way. They are going to be leading the world. They will be the next world superpower at the rate they're going. And again, I don't say this in any joy. I'm telling you this because that's the reality of the situation. If we don't start to refine here in the U.S. and get a hold of this market, they will take over and they will be the next world superpower, which is, I think, what they want. When we look at what they're doing with their investing, everything is in AI. It's in a lot of their infrastructure, too, in the country. You've seen in China grow significantly over the past 25 years. And they were coming off about 30 years of almost negative GDP growth. It was like a flat line from 1970 to like 2001. And then, of course, Bill Clinton brought them into the World Trade Organization. There was a lot of outsourcing to China because it was cheaper to produce there, and then import it to the U.S. and to other countries, and they started booming. Look where they are in just a mere 25 years from where they were from 30 years ago. Really, it's a remarkable from what they've done. They've really industrialized their country. But now, what we've got to think about, and this is, again, very, very important, do we want to be reliant on China for everything? For medicines, for vitamins, for lots of other products we get imported here because we're simply not producing them. And more importantly, do we really want them to be in charge of AI? Because if they want to shut down our military, They can do that with the snap of a finger. All they have to do is say, we're not refining this for you. And then what are we going to do? Nothing, because we can't do anything about that. They are in control. So let's be very cognizant of this, folks. If Trump does not get a good grip on this very, very soon, he's going to have issues with people in Congress. We've got to talk about, for example, where are we going to put these plants? How are we going to get the energy that is necessary for them? And again, this is besides the data centers and the technology itself. We're talking about refining the rare earths that are necessary to have in a lot of this new technology we have. And again, we can be a massive player in this too, if we get this going. Now, there's talks about it. It's talking about putting plants in Oklahoma, and I think in Texas, and they have an idea for about 4 different plants all around the country. And we're going to be working with Brazil for mining, which is a very positive step to extract a lot of these resources and then take them here to the U.S. But one other thing that's very crucial too, if we get a good grip on this, and if we start doing this in an effective manner, you will see a lot of other countries, probably mostly in the Western Hemisphere, instead of sending their rare earths to China for refining, they send it here to the U.S. Can you imagine how that would boom the economy? Now, I have my issues with the data centers and, of course, the data collection of us. You know that. I think it's a violation of our Fourth Amendment. Now, we will need data centers for other things, too. I'm not happy about them collecting our data, of course, but we will need data centers for this AI technology. That being said, this would have a major boost on the economy. And right now, as I told you before, China's leading in it, and so is India. Do we really want to be in third place, folks, or further down the line? I don't think so. And they will use that to take us down. Make no mistakes about it, they will use it that way. So if we want interest rates lower, if we think this is going to help with inflation, first of all, we got to get the oil market under control. We've got to stop this war in Iran, number one. And we've got to start investing here in the United States. Countries are not going to take a step in investing here in the U.S. if they feel, for example, Congress could overturn something like an AI refining center for rare earths. They're not going to do that. It's not a safe bet for them. If they feel like it can get shut down in 10 years, 5 years, 20 years, they'll stick with China, who's investing a hell of a lot of money and resources into that. And there's not going to be any issue in the CCP about having these refineries. There simply isn't. Now, we have talks about pollution and what have you. Okay, I understand that. But we're Americans. We use our ingenuity all the time. We're very resourceful when we want to be. And we can find ways to in a clean manner, to refine these rare earths, to use the proper amount of water, and to cultivate that. There's many ways we can do these things, and where we can put them here in the United States, and it'll create good-paying jobs, because this is a market lots of people want. And I have no other way to say this to you, ladies and gentlemen, but we got to get U.S. labor productivity up. It's saying here in the article in Quartz that the U.S. labor productivity grew at an encouraging 2% in recent years. Again, we've got to get those numbers up. We're higher than the pre-pandemic average levels, but we've got to start rising. We're outpacing European economies, but the thing is, they've been in recession for quite some time. Germany's on its third year of being in a recession. We've got to do better than this. We've got to do much better than this. We've got to do better with our trade deals. We've got to do better with refining. We've got to do better with manufacturing here in the U.S., producing our own crops, our own beef and chicken and what have you. All that has got to be on us. And we've really got to start investing, especially in our food productivity, the green revolution, because if we don't start doing that, we're going to be in lots of trouble very, very soon. We got 35% of the world's fertilizer not going anywhere, which is very detrimental to 70% of our farmers, by the way, that don't have the means to either pay for the fertilizer or to even have access to it. And by the way, folks, it doesn't matter how rich you are, if there's no food to be grown, if there's no cattle to be processed, what are you going to do then? You're not going to do anything. Your money's meaningless. And if we don't have the oil to run our electrical grid, for example, what are we going to do then? Live in the darkness? We've got to get a grip on where we are, folks. And this is what I am trying to tell you. But I think the idea that we're going to have lower interest rates soon, or if we're going to be dropping our inflationary rate, I think is something for a dream, because that's not anywhere of where we're headed as of right now. So, wanted to share this with you folks. It's very important that we get a grip on these things. I'm looking at another article here just to relate to us and other related news. And this is out of the Wall Street Journal. And again, they're saying what I'm trying to tell you. It says here, as officials and contractors are working in the border security milled around in a convention hall. This is interesting too, by the way, because there's many different ways we can use AI for the better, okay? And there's other ways they're using it against us. And I think this article kind of tiptoes on both sides of the aisle with this. It says here that AI analyzed their threat potential in real time at this convention they had and displays the results on computer screens. So this is almost like Minority Report with Tom Cruise back in, I think it was, 2001? Right? Someone could do something we don't know. They look like a threat, right? And we talked about the kill switch they're trying to put in cars and manufacturing in 2027. How much is that going to cost us, too, by the way? Something that's completely ridiculous. Something that totally violates our rights and our privacy. It's almost like a police state, folks, but this is exactly what we're talking about. If we're using this on the border, though, that can help us detect people coming into the country, that's something different. But the idea that we would use this in society and, like, for example, street cameras and what have you, that's not something we should be investing in. I don't think. I don't want to live in a police state. Do you? Did you vote for that? I don't think so. Now, companies are showing off how these systems, and by the way, this is going to be the future, though. If we have the government investing in a lot of these AI cameras and the technology for that to help with border security, that's something more positive on our northern and our southern border. That's something we can look into. I'm not opposed to doing that. We need to keep our country safe. It's a national security risk. So there could be a lot of investment and potential investment in this, so long as we're not using it against American citizens. If we're using it to secure our border, that's something different. But the companies have shown off how their systems from miles away could distinguish people from animals, or those carrying bags or weapons, or using mounted cameras or sensors or drones as small as a child's toy. So this is how advanced this technology is really coming into. And I thought this is very, very interesting, because we're seeing the rapid acceleration of AI in especially the border security technology. It's really becoming popular. It's bringing new competitors into the industry too, which is what we want, because competition helps things grow and foment, of course. And it's offering a new vision of what surveillance and border enforcement could look like in the future. I'm not opposed to that. We should have a secure border. We should be able to track who is coming in and out of our country. This could be beneficial to us. Now, again, as I told you before, if this is going to be on every street corner and every vehicle, on our cell phones and our computer cameras, I don't want things like that, though, because we are allotted privacy here in the United States. It's a violation of our Fourth Amendment. And that's why I'm very opposed to a lot of these new data centers they're putting up for those purposes, of course. Now, the Trump administration has made border security and immigration enforcement its top priority, even though we have to get those deportations up by a lot. We've only deported, I think, about 468,000 people. The rest have left on their own admissions. And, we're seeing the vendors at these events, they've been very eager, though, to secure funding and get contracts. Again, these are government contracts, before political winds begin to shift. So I think it's very crucial about how they're using this technology and what they're investing in. But we've got to start creating it. That's the problem. If we're not going to create these products, what use is this investment? It's going to go on the wayside. People are going to start losing money. So I only bring this up to you because there are lots of potentials in AI that could be beneficial to us, especially to our military, and if you will, and of course the border security and whatnot. So if we're in that line of work, this is something that can be helpful to you. It can help you identify people, especially the bad people that bring the drugs, the human traffickers, the weapons runners, and all this other nonsense, the fentanyl that comes across. If we can identify this using AI, we can stop a lot of it from coming into our country should we want to do that. So I'm all for that if we're looking at surveillance intelligence systems on the border. But I don't want to see this into the United States. It's just not something I think is conducive to a healthy society. And it really comes down to, again, as I told you before, a police state. And once they get control of this, once they allow this, they will not stop, folks. They will not stop at any event. So let's just be very, very cautious of what we use with AI as time goes on. Okay. Let's jump into our stock market numbers, folks, just to end off our weekly economic reports. We'll jump right into that right now. Let's take a look at the stock market, how we're trading today with our top marginal rates and futures. Here we go. Let's look at the Dow Jones now, trading at a whopping $49,527 flat. We're down just 0.14% today. S&P 500 is in the green, trading at $7,380.14 a share, up some 15 points. And then we got the NASDAQ trading at $26,174.19, up 1.43%. And so when we look at, for example, things in the AI sector, as I've told you many, many times before, it's very, very important that we understand where we are with this. Because, again, as I've said to you before in the past, AI is what's leading a lot of these markets. All right? There's no shortage of AI. So what's driving this week? The AI and the semiconductors. Their earnings are beating their expectations. It's really lifting the NASDAQ and the S&P 500 right now. That's why you're seeing those in the green. Now, a lot of the geopolitical tensions, especially with the Iran, the U.S. war, has eased because of President Trump's rhetoric. Although we are seeing a return to conflict, I do believe that, and we'll get into that momentarily. But it's boosting the risk appetite for the midweek that we saw. We're seeing also the oil prices cooling today, and we're seeing a reduction in the inflation concerns as of right now, although I do believe that's going to begin to shoot up very soon. So that's why you're seeing the markets kind of shifting today, and you're seeing consumer sentiments improving today, again, supporting the Dow components. So that's why those markets are performing as they are, again, near record highs. All right. Again, as I told you before, the government's very bullish on AI. A lot of it's invested in a lot of these stocks, especially our tech stocks today, as you will see. So that's why you're seeing these overperform. But it's not always indicative of a strong economy. Let's just be very clear on that. But let's get into our tech stocks next. We've got Bitcoin trading at $79,889.54 a share, up 122 basis points. We've got NVIDIA trading at $215.82 today, up 2.04%. Meta Platforms trading at $609.85, down 1.13%. Apple up 1.51%, trading at $291.79 a share. Alphabet/Google trading at $394.48 a share, down barely a point today. And Microsoft trading at $416.91, down almost 1 percentage point. Dell Technologies really taking the cake here, trading up almost 14% at $262.50 a share today. Micron is trading at $737.25, up just over 14%. And Broadcom is trading at $432.62, up 4.86% today. So we've got the tech stocks, the crypto stocks are a little bit mixed today, but the AI hardware names are absolutely ripping through today. We've got Micron and Dell, the biggest winners, up around 14%. It's really remarkable to see that. But again, thanks to the surging demand for the AI servers, the high bandwidth memory that everyone is investing in right now. Broadcom is also sharply higher on the strong custom chip orders that they're having. And NVIDIA and Apple are also solidly green today, as you've seen, while Microsoft and Alphabet are slightly lower on the profit-taking and the margin concerns for those companies. And Bitcoin is flat to slightly positive, but it is up from where it was a month ago. It's kind of getting back to where we were at the beginning of the year, where I believe it was around 83,000. So we're seeing a bit of a return for that. So overall, the AI infrastructure trade is really dominating those markets today, so I'm not shocked to see that a lot of them are up or only slightly down this week. All right, let's move on to our precious metals. Let's not waste any time with this. Because, we all are very concerned about how we're doing on the gold markets, of course. And, of course, gold is indicative of how the inflationary rates and, of course, the U.S. dollar is. So where is gold today? Trading at $4,731.70 right now, up 0.44%. We've got silver in the green again, trading at $81.03, up 1.07%. Again, they're both up very, very significantly from where they were a year ago. Then we look at platinum, trading at $2,066.20 a share, up 0.19%. And palladium down 1.44%, the only one in the red today, trading at $1,501.50 a share. So really looking pretty good. Gold and silver, they're resurging today. Gold, of course, being over that 4,700 threshold. And again, I do believe it's going to continue to rise, folks. Everyone I've been talking to has said is gold is going to be taking off very, very soon. Again, I'm always bullish on the gold, especially when we look at things like inflation and the strength of the U.S. dollar. So that, I think, is going to rise. People are estimating 6,000 by the end of 2026. Will it get there? Only time will tell. But it's on the rise, folks. And we have silver trading above $80. As I said before, the investors are now piling into these safe haven assets amid the global political tensions and what's happening geopolitically, of course. And we have a softer U.S. dollar this week, so therefore the gold and silver are in the green. Platinum and palladium are firmer as well, supported by improving auto catalyst demand and tightening the supply expectations. So overall, we got the metals trading with a strong risk off bid today, driven by the macro uncertainty and, of course, the central banks buying them up and supply chains constraints, ladies and gentlemen. All right, and finally, the most important topic you're all wondering about, I'm sure. How are we doing in the oil field? Oh, yeah. Well, West Texas Intermediate trading at $95.54, up 0.76%. And Brent crude is trading at $101.24 per barrel today, up 1.18%. When we look at, for example, I've got Urals crude trading at $92.54 per barrel today, down 6.04%. And then I'm looking at also, for example, let's see, Murbain crude. Where are we, Murbain? We're trading at $76.03 a barrel today, down 0.36%. We've got Dubai crude trading at $74.83 per share. And I don't know if the Indian crude is on this today. I don't see it. So I'm not sure where that is today, unfortunately. But I think it was in that realm with where the Dubai and the Murbain and the crudes were trading, excuse me. But what we're seeing with the oil, and again, it's no shock, it's the way the market's working. We've got the escalating U.S.-Iran tensions now that are injecting kind of a fresh risk premium right now. We're seeing the U.S. forces have, hit a Iranian flag tanker, so the oil markets are kind of all over the place this week, ladies and gentlemen. We got the Strait of Hormuz disruptions remaining the dominant driver for all of this, and it will continue to be so long this is happening. And we've also got some refined fuel shortages are emerging as the crude supply looks adequate. One thing I will say to you, though, that's very crucial. The oil that left the Strait of Hormuz on February the 27th has finally reached its destinations. We just saw, I believe, one of the final shipments coming into California a couple of days ago. So there's nothing behind that. A lot of that's been shut down. And a lot of the oil that has left has gone to China, among other places. So we've got to understand something. We haven't seen the shortages yet. There's been talks about it. But we haven't seen the oil shortages as of yet. So a lot of it's met its destination. It's been refined. It's out of the market. But the supply after that has been in a standstill. So as the tightness in the products and the market supports the crude prices right now because refiners have increased their runs and they're competing for more feedstock. Time will tell what happens. I don't know, but I can tell you folks, it's not going to be great. We're hearing talks of the peace deal rumors now, creating more volatility. Trump comes out and says we're looking for peace, and then, of course, we're in situations where we're attacking Iran yet again. So The oil market is, again, all over the place. And let me just briefly explain this to you. We're looking at things like out of this article in CNBC. Take note of this. No one else is talking about this. We talk about peace and getting a negotiation, but where do we actually stand in the supply chain? And this, again, is very telling. This came out yesterday afternoon. Shell CEO says oil market is short nearly 1 billion barrels due to the Iran war, and the hole deepens every day it happens. Even if Iran decided to open up the strait today, and that oil flew right through that. We still have 2 months of basically limited oil trade, folks, not meaning its locations and obviously the markets in these countries that are dependent on them. But that is a massive, massive strain. We've got to understand this. This is a major, major problem. What comes after this? We don't have the oil coming to these ports now, so what's getting refined? Nothing. And to put the number in context, the entire world consumes about 100 million barrels of oil per day. And again, we're at 1 billion, with a B, barrels short. So even if we have recovery of oil and gas production and the inventories, it's not going to be quick. It's not going to be a simple process. It's not flipping the switch, as I've said to you many times before. A lot of these Gulf Arab states are offline right now. Some of these refineries have been hit, and nothing is moving through that strait from these countries. Kuwait, the Saudis, the UAE, the Bahrainis, the Qataris, nothing is flowing from them. And the United States is creating a blockade around Iran's oil. So that is, again, hit or miss, despite about 150 ships leaving the Irani ports. So we've got to understand where we sit with all this, folks. Right now, jet fuel consumption has been curtailed by about 5%. In the airline industry, we're seeing lots of, especially European airlines, canceling lots of flights coming up this year. I want to say Lufthansa canceled 20,000 flights this summer because nobody knows where this jet fuel is going to come from. And again, when you cut off 20% of the global oil supply, folks, we're going to have problems later on. When you cut off 35% of the fertilizer that comes out of that region, you got problems. The liquefied natural gas, the jet fuel, all this is going to have massive, massive hits on these economies, especially in Europe and Asia, but we will feel that effect as well. So I say this to you right now because we haven't really seen these supply chains bottlenecking just yet, but we are going to be seeing that very, very soon. And I think we're kind of at the precipice of that right now. That's the way I see things. So we're facing the biggest supply disruption in our history. And this is not coming just from Marco Gerace. This is coming from the International Energy Agency as well. So take that as you will, but I think prices we're going to see start to go up very, very soon, especially across the globe. Okay. So, not the best economic report, folks. Some positives, some negatives, a little bit of volatility. The market's good in some aspects, but the truth of the matter is, folks, we are hitting inflation, and I do believe we will hit lots of dragflation. We'll hit very high inflationary rates very, very soon, especially when this oil supply really starts to kick in. And you're going to see less economic output coming out of the United States. All right, let's move on to another story now that's unfolding just yesterday evening. It says here the United States military on Thursday carried out strikes on Iran's Qeshm port in Bandar Abbas, coming from a Fox News reporter posting this on X. And the official said that the strikes does not mean the restarting of the war, even though I just told you we'll probably have attacks on May 7th. And what do we see? We start to see some tensions really starting to build. And again, we talk about an end to the ceasefire. There is no ceasefire. The war is on, folks. This is where we are. And here's the reason for the strikes. I think this is the most telling part about all this. The strikes took place as the U.S. awaited Iran's response to a U.S. proposal that would have halted fighting between the two countries, but leaves the most contentious issues. That would be Iran's nuclear program unresolved for now. So what did we decide to do? We decided to strike them. How was that going to get the Iranians to the table? Amid a blockade in the Arabian Sea preventing their ships from moving? I don't know how President Trump is focusing on this right now. These are all the wrong steps to take. None of this is going to bring the Iranians willingly to the table. Certainly not making any concessions for the United States. I'll tell you that much. But again, I don't understand Trump's thinking. I think that's the biggest takeaway from all this. Why would you go and attack the Iranians right now when we want them to come and speak to us? It doesn't make any bit of any sense, folks. Now, we always hear we're a week away or 48 hours away. I think they're going to come to the table. They should come to the table. When will they come to the table? It's all rhetoric. It's to manipulate the markets. I saw some people got very, very rich on poly markets just yesterday, I believe it was, about the oil prices dropping significantly. This is the problem. People know what's going on, and they make a lot of money off this. But where does Trump really sit with all this? This is what he told a reporter just yesterday. Take a listen.
After these strikes, is the ceasefire with Iran still on?
Yeah, it is. They trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast.
So, again, I don't see how this is going to get Iran to come to the table. Certainly not anytime soon. And the U.S. military launched a new series of airstrikes on Friday, today, targeting a group of empty tankers in the Strait of Hormuz that were trying to barrel through the blockade of Iranian ports, according to U.S. Central Command. I'm seeing footage of it right here on my computer screen right now. So there are the ships known as the MT Sea Star 3 and the MT Sevda were attempting to breach the blockade to reach an Iranian port in the Gulf of Oman. And as a result of that, the strikes successfully prevented the ships from reaching their ports. A third ship was stopped when an FA Super Hornet disabled the unladen oil tanker's rudder by firing several rounds from a 20-millimeter cannon gun. That's what the combatants have said. It says here that the United States, roughly 15,000 troops enforced the blockade, which took effect on April 13th. Again, we know that about 150 different ships from the Iranian ports have traversed this, so it's almost like it's hit or miss. They stop a ship here and there, but a lot of ships are turning off their transponders, and they're still continuing on. The problem with all this is we are escalating the situation. This is not going to get the Iranians to come to the table. What is President Trump going to tell President Xi next week when he goes to meet with them? That we're attacking the Iranian ships that may send oil to your country? What is he going to say about all this? I can't imagine Xi would be very happy or pleased about any of this, to be honest with you. I don't see it happening. But we are now seeing the United States beginning to slowly attack the Iranians. And again, I do believe, as I said to you before, something is going to take place very, very soon where it comes back to an all-out war. That's just where we are, folks. So don't expect this to end anytime soon. I told you before, don't get your hopes up. The Iranians will respond at some point to this. Now, we know they've struck targets in the UAE as of late that have tried to traverse the straits. They've hit them with, I believe they hit them with drones, if I'm not mistaken, and pushed other ships back that have tried to cross the strait. Nobody took President Trump up on Project Freedom for that reason in particular. And we know that the Strait of Hormuz is still heavily mined. And even the Iranians don't even know exactly where all their mines are. So that's why Trump had to do away with the guidance of our ally ships through the Persian Gulf. We're not going to do that. It's not going to happen. It's going to happen through the Iranians, who still, by the way, ladies and gentlemen, right now, as I'm sitting here and speaking to you, have full control over the Strait of Hormuz, despite taking an oil tanker here or there. They still have complete control over the Strait of Hormuz, and those ships that they don't want through are going to stay there. And the ones that will comply, that will contact the Iranians, that will pay the $2 million fee in an Iranian rial or the Chinese yuan, they will pass through, and they will make it back to wherever they're going. But the idea that we're in a ceasefire while we have a naval blockade, and just referring to these as skirmishes, again, I don't understand this. Downplaying what we just did as love taps? after Tehran targeted 3 U.S. warships in the Strait recently. Again, it's going back and forth. It's going to lead into a much greater tension, and we will be back to fighting with the Iranians, folks. Because I don't see another way out for this. Trump is not going to just allow them to have the Strait of Hormuz to act as a toll booth for them, to bring in lots of money for them. He's not going to get 0% enrichment of uranium from them. He may get a nuclear deal with them. But this idea that we're going to continue to strike your ships or take your ships or bring your ships to our ports, again, it's not going to be anything positive. Now, Admiral Bradley Cooper also said in his statement that U.S. forces in the Middle East remain committed to full commitment and enforcement of the blockade of vessels entering or leaving Iran. So let's stop for a second. We're going to allow any other ships to leave the Persian Gulf, but make sure that the Iranian ships don't leave? And we think that the war is going to end and they're going to come to the table? You want to say our highly trained men and women in uniform are doing incredible work. Okay, but then the question begs, why have 150 Iranian vessels or ships ported at Iranian ports been able to evade your naval blockade? How is that taking place? It's a very important question I don't think we'll ever get an answer to. And by the way, just so we're all understanding where the Iranians are in all this, a confidential CIA analyst delivered to the administration policymakers this week concluded that Iran can survive the U.S. naval blockade for at least 3 to 4 months before facing severe economic hardship. Let me just point out to you, ladies and gentlemen, this war has cost us anywhere from $1 to $2 billion, at least every single day we've been engaged with this. So for the past 2 months now, we've been spending $1 to $2 billion every single day. The analysis also said by the United States intel community, whose secret assessments on Iran have been more sober than the administration's public statements, also found that Tehran retains significant ballistic missile capabilities despite the weeks of intense U.S. and Israeli bombardment. It says here, Iran retains about 75% of its pre-war inventories of mobile launchers and about 70% of its pre-war stockpiles of missiles. I think those numbers are probably on the low end. They probably have much, much more than this. Never forget they've been planning for this for well over a decade. They've been planning these attacks and how they would respond to these attacks. They have the stockpiles. They have the ability to hit the targets in Israel, throughout the Middle East, the Gulf Arab states. We know that they can reach into Eastern Europe if they need to, and even inside the Mediterranean. So when we say that they better get there real soon, otherwise, Scott Bessent said the other day that their economy's in shambles. Marco Rubio uttered the same nonsense. It's just simply not true, folks. It's just simply not true. We know that they have contact with Pakistan, for example. They have several routes that can go into Pakistan, which then can go into India. We know that they have a railway that can go in through the, I think it's called the Belt Road Initiative, if I'm not mistaken. A freightway that can take goods into Western China, for example. They have other routes. And of course, they have routes to the north, then go through the Caspian Sea and then go into Russia. So these three big powers in BRICS, Russia, China, Iran, they can all still greatly trade and have commerce with one another. Nothing is being shut off because the Persian Gulf is shut down. If that were to even happen, which again, we know is not the truth. So this tells me, can the United States last another 3 to 4 months of this? I would say no. And that reality is going to be very, very clear to many Americans very soon when we start seeing food not making it to the shelves, goods and services not being able to happen because we have no gasoline or oil. It's going to be a very, very stark reality. This idea of short-term pain for long-term gain is simply not true. It's going to be long-term pain for little gain, folks, because we are not going to get what we want from the Iranians. That's all I have to say on that, folks. Again, I wish I had better news for you. I tell it to you how it is. I don't tell it to you how I would like it to be. But this report is very damning. It doesn't match what President Trump says, what J.D. Vance says, what Scott Bessent or Pete Hegseth or Marco Rubio tell us. And the warmongers, and the fearmongers too. President Trump just told a group of young children in the Oval Office that the Iranians were going to, drop a nuclear bomb on us. Again, it's ridiculousness. Absolute ridiculousness. While talking about how the Iranians so-called killed 42,000 of their own people right in front of these young children. I don't understand this at all. But this is where we are, folks. So, gotta take it as it is, I suppose. Okay. All right. Well, let's change it up for just a moment. I do want to talk about this hantavirus. I keep hearing people get very upset about this, and what do we need to know about this? And I'll make this very brief because, again, when I just told you that we're about 1 billion barrels short of where we ought to be, that's not good. Okay, let's just make sure we understand that it's not good that that's taking place. This has the remnants of COVID. It really does. This whole fear about this hantavirus, which again, I'll be very clear with you, it's not a communicable disease. First and foremost. So again, if I coughed on you, if I have this virus, I can't give this to you. Let's just, again, understand where we are with this. But they're making all this hype about some passengers, including 6 Americans. They were on this cruise ship that stopped at St. Helena, a remote island in the South Atlantic, according to the ship's operator, before they recognized that there was a viral outbreak. So, where does this leave us now? We have to understand how you get this virus. And the way this is spread is through contact, get this, with feces, urine, and saliva of infected rodents. Now, is it possible the ship could have had rodents on the ship and it could have contaminated and infected people by biting them or in the food supply and the people ate it? That's possible. It's very possible. There's obviously these cruise ships are not the most sanitary places. So that's a possibility. That could have been the reason why these people contracted it. And 3 people are known to have been killed. But again, it's not something that we need to be worried about, folks. I was reading since, I think, 1993, there's been a total of 890 total deaths, I think. This is according to the CDC. It says here there was 26 hantavirus cases in 2023. The most recent year with available data. The agency has counted 890 in the country since tracking it in 1993. So imagine that. For over 30 years, they've tracked only 890 cases. And God only knows how many of those in America have died. But this, folks, is not something we need to be worried about. But isn't it interesting? They're trying to push a vaccine on this already. It's amazing to me. And, of course, spread this fear. Stop with it right now. It's not going to happen. I hope it doesn't work again, like COVID worked on us. Of course, we know Anthony Fauci loved to peddle that fear. Most people didn't understand. There's been several different types of coronaviruses in existence for quite some time. And this one was no different. But yet they sold you a bill of fear. And many, many people bought it. They wore the mask. They did the social distancing. They did the lockdown. They closed their businesses. They sent their kids to school in a mask. We cannot let them do this yet again if they try to do this. That might be a reality. Oh, the hantavirus is here. We need to lock down. Don't go to work. Don't go anywhere. Don't try to get more gas because we don't have any. Can you see that happening, folks? I can. I absolutely can see something ridiculous like that taking place right here in the United States. Again, if people are dumb enough to fall for it. Don't be that person ever. Because this is not a serious virus, folks, that we need to worry about. Again, I'm reading, I'm listening to doctors that know what they're talking about. The transmission between people is associated with very close, prolonged contact, such as members of the same household sharing a bed or being intimate in some way. I can't cough on you and give you this, okay? It doesn't work that way, all right? Let's just be very, very clear on this, all right? So don't be worried about the hantavirus, although they will push this on us. Make no mistake about it. Folks, that'll do it for the show today. That'll do it for our week. Another show in the books, another week down. Thank you again for being here as always. I appreciate you so much for sharing the show. I see a lot of you are doing that, so thank you so much. Folks, make sure you're staying prepped always. Never forget to do that. Have a great rest of your day. Enjoy your weekend. I'll see you back here Monday for more groundbreaking news on the next Marco Dre Show. Until then, be good, stay busy, and God bless.